Good afternoon, everyone. Gabe Velazquez here with you, transparenttradesolutions.com on a Friday. This is the 20th October. Let's get right into the charts, everybody. Again, give me a thumbs up, put some commentary. We've had some very interesting situation. We closed right on the lows. I call it the Friday effect. If you recall, last Friday, we had a similar situation. And this is largely due to the potential for the uncertainty over the weekend in the Israeli-Hamas war. There's obviously there could be a flare-up, especially as if and when, we don't know. Obviously, they're not going to tell us when the ground incursion begins into Gaza. That may, in fact, spur, other players, other situation there that would in turn cause some havoc in the oil market and so forth. But it's a very interesting situation. I think that's really what's happened today. Obviously, rates also key. We had Powell yesterday. Market was all over the map. Rates did touch 5% on the 10-year. We're going to get into that in a minute. They did come off somewhat, but I think today's selling at the end of the day was just simply a kind of a precaution, people just kind of taking a step back and having a little bit of a cautious stance against, what the potential for any kind of flare up in the Middle East. Okay, so again, sign up for the newsletter. I'll be writing about this weekend. Several interesting. I'm going to just basically focus on some of the interest points. We are coming in with some puts, TTS, on one financial that we put on, and I did that purposely to have some put exposure. We're doing really well with that. DFS, Discover. We do have, we're deep in the money on those puts. We put those on yesterday as the report came out, and the stock is down about 10 points from where we put it on. So we're doing well with that. We're also still along the utilities as a defense play. We've given back a little bit of that, but we're still hanging in there with that. That's an interest rate play. And then other things we're looking at as well. So let's get into the charts and go from there. Let me share my screen and start. I want to start with a 10-year. And recall, I've been talking about this level here in the 10-year, going out to 2007, and in fact we did come in a little bit, and we're coming out of that. This is a very similar level on the 30-year. You can see we kind of hanging in there, huge level, but just going back to the charts, nothing else. You can see we're coming out now. Obviously, we're going to there's still a lot of work to do for rates to come back off, but we could see a rally back up to this. This is the previous resistance level that we've been talking about. By the way, if you've been, go back and check out some of the videos from the past several weeks. This is these blue lines I put up. So we'll see if maybe the safety trade, that is kind of why I think the bonds rallied a little bit after this massive sell-off. Safety trade meaning, people, again, putting money into the bond market as a safe haven going into the weekend. Similarly, the 30-year is hanging tough right at the same exact level going back to, 2007. This looks exactly the same on the 30-year, which, by the way, coincides with it. There it is right there. And TLT is where you want to, if you want to position for a bounce out of this, TLT is the way to go. We're using this as a proxy for the TLT trade. So that's interest rates. And you can see, I've been talking about the 5% to my members as almost like a self-fulfilling prophecy. When everybody expects it to go to 5, maybe it does go to 5. So it did go to 5. The next question, obviously now, based on the level that I just showed you, is this going to be the peak in rates? If it hangs in that level, and we have, we still have to break below here now. So first I had a line. In fact, the first line we had was down here as rates peaked here and then dropped down to there. That's 450. Now this line moves up to here, and now we got to break 487. And I do see even just a trade down to here would be really nice. I think ultimately, if we come off with rates, here's where they bottom, and then we, maybe chop around, whatever. So, but we still have to break through this 487 on the interest rate market. S&P finally caught some selling right at the very end, as a safe. I think this is more or less people just kind of getting with the cautionary situation all across. There's so many cross currents and whatever, and earnings are all over the map. I mean, it's company specific. We had Netflix up huge, Tesla down huge, which I'm going to talk about because Tesla I think is coming into some really great levels. However, here's the thing though, look at the way it's been drifting lower. I made this comment the other day. Intraday, it's been doing this. Like even yesterday during the Powell speech, it was all over the map. I mean, this thing was swinging 50 points intraday. You may have gotten chopped up here unless you had the wherewithal, the mental fortitude to hang through all these whipsaw moves and then, finally gave way. Similar today, we had sideways in the blowback session, in the overnight session. And in fact, we did chop around all day as well today for the most part. In fact, we attempted a rally earlier today of about 30 points. Last 2 hours went sideways, and now finally at the very end gave way. Now, the overall chart, I'm not seeing a ton of great quality areas here in the we're basically just coming right down to 4,200 probably. This is the last area here. That's a tested level. We probably go a little bit lower there. You can see there's just not a ton of quality below that. That doesn't mean the market can't pause here, but it's from a level perspective, just not a lot going on there. Similarly, the breadth of the selling really is on the NASDAQ. And we are, we've come down to this major support area. And with the mega caps reporting next, we've got Meta, we've got on Tuesday, Microsoft, Alphabet, and what's the other one? Amazon. So all of those will impact the market. We'll see if that actually, kind of stalls out all the selling, reduces the momentum. Similarly, it's been a very grindy, choppy move lower. You can see here, it's been, we've been chopping. We actually went up here sideways. And in fact, again, another attempt at a rally earlier. These are 150 point swings, by the way, incidentally. That rally right there was almost 150 points. So we're swinging, here yesterday during the Fed meeting, that thing was swinging 200 points. So again, if you have the stomach to sit through, if you're short and you have the stomach to sit through 150 point, 200 point swing against you like here, then you're good to go. Honestly, realistically, I don't know how many folks have that type of mentality or whatever, but some folks do. But in any event, we're not coming down to these levels down in here. Russell also interesting, broke 1700. There are some levels coming up here on the Russell, but not a lot of clean levels. Again, just major support. None. Pretty much that's it. We've already talked about the bond market. Not a lot to talk about in the dollar. Just save you some time. Dollar's done nothing. All for 2 weeks now. Just meandering, which is really interesting in light of what's going on, with the Middle East and all that. So there's nothing in the dollar, not even worth looking at the currencies because they're essentially mirroring the same thing. So there's just not a lot. Again, gold continues to rally. It did come up to the 2,000 mark and then pull back. Whether again this keeps going, it's going to be interesting to see. It's had a huge run up. It's getting pretty extended. If tensions ease up, or if there's kind of a clear resolution, i.e., clear. This is probably still going to stay elevated until there is some kind of till that whole diffuses, if you will, in the Middle East, which who knows what's going to cause that, whatever. So you just never know. But I think gold is clearly, this is the most, I talked to my members, the two most impacted markets for what's going on in the Middle East is gold and oil. And oil, by the way, a little surprising, was actually down, right? Everybody see that? Gold was actually down today. We have rollover now. We're back in the December contract. We're out to the December, but again, very choppy, lackluster trading in oil today after a big pop. Last weekend, we actually rallied in anticipation of something going on in the Middle East. So maybe this is telegraphing something. That's really interesting. I found that very interesting today. Nat gas, just real quick here. We've been talking about a pullback to 3. The way it came in was just really not good. And it looks like nat gas is back to just, very choppy trading, probably headed back to 250. So you can see this level actually worked out really well. Now we're back into this, and we're going to have a big, massive gap up next week when they roll over, because the December contract's trading around 320. So it's about 100. So we're going to have a gap up like we did here up to there on the rollover. So be careful with that, how you trade that. Nothing going on in the grain markets. You can see we just came right up to 1320 on the soybeans. Wheat and corn seem to be wanting to break out. So we'll see if that actually pans out here. You can see looks like we had a nice pop last week, and then we came all the way back. So we'll see if we'll see how that goes. Okay. Other than that, really, the last thing I want to cover is the VIX. That jumped above 20. Remember, I've been talking about 20. We came here. That made the low back earlier in the month, came down to 15, and now we're back up to 20. The fact that we're back up to 20 means we probably go up to 25. That's the next level of VIX, where we may see another bottom. We haven't really seen that capitulatory kind of, maybe that this was it, but it didn't feel like that. This meandering kind of movement down is more of a buyer strike than actually panic selling to some degree. So that is something we need to see as well. Again, in terms of stocks, we do have, I mentioned looking at Tesla. We're looking at that. This has been a bellwether stock for market sentiment. I can tell you this is because it's basically the way we want to look at Tesla is this is reflecting, I would say, reflecting retail market sentiment. And this thing has just gotten crushed. I do feel like this is also going to be a look at this as a capitulatory type of give up phase on this. If they break 200 on Tesla, that could be basically the diamond hands, or whatever we call them. They're probably going to be the last hurrah here on this. So watch that next week, especially again with the mega caps coming in. Microsoft on Tuesday. We'll see how that goes as well. So we get interesting dynamics going on here. All the banks and everything. We, as I mentioned, we're also looking at a bunch of other levels. A lot of beaten down stocks. Remember, I was talking about Dollar Tree. That, in fact, there's some pockets of strength going on here. So Dollar Tree rallied from 103 up to 115. Also gave back some today, but there are some, Oracle actually looks interesting here. So some stocks to look at as well. Oracle looks somewhat interesting here for next week. and so on and so forth. So, all right, everybody, have a great weekend. If I'll be here on Tuesday, I'm putting together another class coming up. If you want to join me for some free classes, or maybe just a free some days in our morning session, just contact support at Transparent Trading Solutions, and we'll be in touch with you and set that up. Okay. If not, have a great weekend, and we'll talk to you soon.